All right, perfect. Yes. So we have a few things going on right here where currently time and price, like Phil already mentioned, time and price is in alignment. So currently, if we want to continue higher, then the area we can continue higher from is this gray area right here. This fair value gap, but more importantly to me is this fair value area right there. And why this fair value area? Because that fair value area overall indicates to me that that is the area where we already offered fair value. So very simply said, that's a breaker block, mitigation block, or an order block, essentially. And when we want to continue higher, we will likely continue higher off of that. But since we have already offered fair value in this area, that means that we have not offered fair value yet in this area right there. So this is the area where price can actually retrace towards the fair value gap, towards the fair value area in the form of currently just the breaker block right there. And we can continue higher off of there. Now, today we also have news supporting the ID. So ideally, I would already want to see a rejection happen today off of that gray area. The next thing is, I would not want to see a big retracement from the, a big retracement right there and having a big retracement inside the overall gray box, this fair value area right there. So currently what we are doing actually is we are having a big retracement, which I personally do not like right there. Since we already have price and time in alignment, it doesn't make a lot of sense to have such a deep retracement like we are currently seeing. So that worries me a little bit. And how can we actually see this? Because of course, we know that currently is not rejecting, just not as of yet. It might reject late during the day, but not yet. So here on the 4 hour and 1 hour right there, how do we prevent from potentially taking a trade that we should not take? Well, here on the 4 hour, we have the first candle right there rejecting already. The next candle ideally should be an up candle right there. Because if this candle already rejects, then there's no reason for it to come back below all the way towards that low to then continue lower and not even have a rejection higher anymore. And the reason for that again is because the only place where it can retrace towards is these highs right there, that fair value area with those fair value gaps. So again, we can still continue higher, but the odds are very much diminished in my opinion right there. And I do not like this as much anymore for longs. So that of course leads to understanding as well what we are doing on other pairs and instruments. Let's first look at the ES and the NASDAQ right here. Here it's quite important to understand the daily fair value gap. We are running into that daily fair value gap right there. And again, how can we view this? Well, we simply wait. We do not necessarily want to go for long positions when we are inside the daily fair value gap. We want to wait for the rejection that we might have. So currently, we run into, again, the first resistance area right there, where we have the daily fair value gap and the 4 hour fair value gap. Perfect. So here, once we get fair value gaps going higher right there, that is exactly when we can look to get involved, or even lower, of course. But if we can get fair value gaps higher, that could be very nice to follow through higher as well. And then the rejection is over and we are just playing the last run right there, which is nice. So on NASDAQ, let's see, that's the same exact situation where we also have the daily value gap. After that, there's nothing stopping us from going towards those highs. So right here is the same situation. We want to wait for the rejection, which we are currently seeing right there, waiting for a new fair value gap higher, ideally, to then look to get involved again. Waiting for any fair value gaps higher first. Very important. YM, it's the same situation. It's as well exactly the same as ES right there. So same exact situation. Then on DAX, let's see. DAX is overall consolidating, again sweeping all-time highs. So I don't really like this. Don't really want to get involved as well. I want to look at the Forex majors right there, which are more interesting. So here it's the same situation, and we already mentioned this briefly yesterday in the forecast, because we can, well, I think we can confidently say, again, the rejection here that we got off of those discount rates is just a bit worrying, because then we are respecting this counter raise right there, and we have an aggressive move higher, which to me says that there is some bullish momentum going on, some bullish intention right there when we are respecting this counter raise. So that worries me a little bit, because when I didn't want to take a 15-minute ST plus read, we would need to expect that 15-minute ST plus read to sort of stop a train right there. And the train is the daily momentum. And we can't expect daily momentum to all of a sudden magically stop by a 15-minute ST plus read. So that is when we need a little bit more confirmation, in my opinion. Where during the forecast, I mentioned, all right, if we can get, and this is looking quite nice, right? The ST right there looking quite nice. Just a sharp turn on a time frame where you demand an ST plus read is simply not enough. And in a lot of cases, of course, that's the probabilities. And the reason for that is because when you have the time frames aligned where you need the ST plus read, so not the ST, so if I was looking at the 1 hour, it's still a little bit different, but where I'm looking at the 15-minute and I need a 15-minute ST plus read, then we definitely need the 15-minute ST plus read. And the reason for that is because here we only had a move lower. And when we only have a move lower with fair value gaps, so only fair value gaps moving towards one side, and we never respect those, so we never retrace back into those, and we never create new fair value gaps going lower and actually aggressively moving lower, not a very small misery fair value gap like this, which I mentioned oftentimes. That is not a great read that you want to look at. That is not a great trade. But if we get then a new leg lower right there, just a confident leg lower right there, that is exactly when we do, when we can confidently say we respect premium rates. But here, we never respected a premium rate. So to our understanding right here, we have been going higher, and discount arrays have been holding right there. Otherwise, we have not been moving higher right there. So discount arrays have been holding. Perfect. So order flow on the 15-minute was bullish, and that's why we wait for a 15-minute ST plus read, because that determines an order flow switch potentially. The order flow can switch right there to being bearish. And when order flow switches, we need again respect of a premium array right there, which we never got. So order flow was always bullish, even though this visually seen seems like very, very, very enticing to get involved already. That's not a great trade. And the reason for that is because order flow never switched. We never respected a premium rate in the first place. That's quite important to understand, because that happens quite a lot, where people get faked out right there just because the market is essentially playing with your emotions. Now, right here, it is very interesting to see what we will do. And again, I don't like this personally for shorts. Unless we now all of a sudden magically get 4 hour values lower again going into tomorrow, then I will say, all right, full margin shorts. No, not full margin, but you understand my exaggeration right there, that I would want to look at shorts confidently if we get 4 hour values lower again. And it's the same for the dollar if we get 4 hour values higher again. But this is exactly why in the previous forecasts, and if you have not seen them yet, I would highly advise to do so, because if you do not understand the situation, I try to explain it fully in the forecast, because it's a very important situation. Because here, if you get caught in this situation, lost audio, 1 second. All right, we're back. So if you haven't seen the previous forecast, that's what I was mentioning for if you didn't hear it just yet. If you haven't watched the previous forecast just yet, I would highly advise to do so, because that's where we go in detail on this. And the detail here is, again, the dollar is rejecting off that weekly order block right there. Yes, but that weekly order block is not initially something I want to trade off of. As in, it's not necessarily something I want to go into the 1 hour to go look at the 1 hour ST plus read, because it's not part of our current order flow. I only look at PD arrays that I want to trade off of that are in current order flow. So right here, current order flow is actually still bullish right there on the daily. But of course, we're in a monthly value gap. We are coming into a weekly order block right there. There's a lot going against us. So here, if we want to continue higher, then the only place we can retrace is this area right there. Everything below is suspicious. So when we do not have rejection, and when I woke up this morning and I saw we didn't reject just yet, whilst I was expecting a London rejection right there because we were already priming up to get into that fair value area to continue higher off of that. We were close to it in London, so London can do it that because London has that volatility to do so, because we also already had news for this day. So then right here, this is extremely suspicious to me that we might want to continue lower instead right there. And that minimizes the amount of losses you might potentially take before you get the right move continuing higher right there. Because I would require here just more confirmation higher. And where someone else, and we can compare this, right? One person A, is waiting for extra confirmation higher right there because it's quite suspicious what price action is doing. Person B is trying to get involved anyways on the 15-minute right here on every 15-minute ST plus read that we might potentially have right there continuing higher. And person B will likely and guarantee will catch the move. The person that tries to catch the trade on the 15-minute ST plus read consistently. But that will come at a cost where person A will most likely might miss the move overall. But that will minimize losses where person B lost audio again. Wait 1 second. All right, with the live stream being interrupted a little bit right here. But anyway, I was talking about person A and person B. Person B is trying to catch this 15-minute ST plus read no matter where we are right there, just trying to catch any 15-minute ST plus read. Perfect. Person B will likely catch the move, no matter what. It will catch the move, likely. But that comes at a cost. And the cost right there is likely all the 15-minute ST plus reads that failed because we are not accurate with the higher time frame PD rate that we are trading from. And that's why a lot of the times in enrollments I mention the hard work is done on the higher time frame, not the lower time frame, because the lower time frame will just simply show you an ST plus read, your entry pattern, when the higher time frame is aligned. But you need to know where your areas are and where your actual boundaries are when you also stop looking for an ST plus read. For example, here I do not look for an ST plus read anymore on the 50 minute. Where person A again that waits for the extra confirmation might miss the move. Yes, might miss the move, but it's a simple math equation because that person that might miss the move did not take any losses beforehand. So essentially zero. The person that might actually catch the move might also miss the move, but is higher probability for person B to catch that move. They might take a couple of losses before they actually catch the move. So you need to, essentially, you need to make sure that you only take one loss right there. Audio gone again